Dear students, welcome to the lecture series on financial accounting. Today in this lecture, we shall take up the partnership accounts. Under Unit 9, we shall learn in detail the admission of partner. Under admission of partner, we have already learned in detail that when a partner is admitted, there is a reconstitution of the firm. So we have to take care of the profit sharing ratios and we have to revalue the assets and liabilities. Goodwill is also to be treated and dealt in the books of accounts. So when we revalue the assets and liability at the time of the admission of the new partner, we have to prepare a revaluation account. In our previous lecture, we have an insight of the revaluation account. Today we shall learn in detail with the practical aspect to solve the question where a revaluation account is to be prepared. Now a question comes to our mind that what is revaluation account and how it is being prepared. So revaluation account is a type of nominal account, the end result of which will give us the profit or loss which has arisen on account of assets being revalued. Because when we revalue the asset, either the value of the asset would appreciate or depreciate. Similarly, liabilities are going to appreciate or depreciate. So the net effect of all the revaluation of assets and liabilities at the time of admission of the partner has to be accounted for. So this is a format where we have recorded the decrease in the value of asset on the debit side. Similarly, increase in the value of the liabilities are being recorded on the debit side. If we come across certain unrecorded asset and liability at the time of admission of the new partner, the same has to be accounted for. Where the liabilities are being unrecorded, they are being shown on the debit side of revaluation account. When we move towards the credit side of the revaluation account, we can see that if the assets value is increasing, we are writing it on the credit side of the revaluation account because it's a profit to us. So assets, and in the amount column we will write that much amount as has been revalued. Similarly, decrease in the value of liabilities is also a profit to us because our liabilities are going to be reduced to that particular amount. So that reduced amount of liabilities would be recorded on the credit side of the revaluation account. Similarly, if there is an unrecorded asset which is being traced out at the time of admission of the new partner, the same is to be recorded on the credit side of the revaluation account. Now we will find out the balancing figure. We will do the totaling of the debit and credit side, and if the credit side exceeds the debit side, we can ascertain the profit. So profit which is being ascertained by subtracting the credit side from the debit side is to be transferred to the capital account, and the individual partners, that is if there are two partners, in both the partners this profit is to be distributed. Depending upon the number of partners, the profit will be transferred individually to each partner's capital account, and the ratio would be the existing profit sharing ratio. Similarly, if the debit side exceeds the credit side, what we will record is the loss, and it is to be transferred to the individual partner's capital account in the existing ratio. So this is the performer and mechanism of recording the profit or loss so arises on account of revaluation of assets and liabilities. Now we will take up a practical question and try to understand the entire mechanism of recording the assets and liabilities and recording any unrecorded asset or liability at the time of admission of a new partner. So here is an example in front of us. A and B are partners sharing profits and losses in the ratio of 2:1. The balance sheet is as follows. The liability side and asset sides are being shown under the balance sheet. So under liability side we have creditors 10,000, bills payable 7,000, and capital account of A and B is 40,000 and 30,000. On the asset side we have cash in hand 7,000, debtors 26,000, building 20,000, investment 15,000, machinery is 13,000 and stock 6,000. Together the total of assets and liabilities are matching and it amounts to 87,000. So these figures of assets and liabilities have to be taken into account so that we can record the adjustments so given in the form of additional information in the question. So let's see what's the adjustments as given in the question. C is admitted as partner for 1/3 share. and assets are revalued and liabilities are reassessed as follows. First adjustment is create a provision for doubtful debts on debtors at rupees 800. If we go back to our balance sheet, we can see that debtors are 26,000 and we have to do the adjustments in these assets and we have to reduce the assets by 800. Building and investment are appreciated by 10%. Here building is 20,000 and investments are 15,000. So, we have to pass the adjustment entry of appreciation in the books of accounts. Machinery depreciated by 5%. Thus, machinery figure of 13,000 have to be taken into consideration, and while passing the entry in the revaluation account, rupees 650 would be recorded in the manner as has been prescribed. Creditors were overestimated by 5,000. So, we will do the adjustments. Here the question says that make journal entries and prepare revaluation account before the admission of the partner. So, the first entry is revaluation account debit to provision for doubtful debts and it amounts to 800. This provision has already been given in the question as rupees 800. So, we need not to apply any percentage and find out the provisions amount on the debtors. We simply have to subtract this amount from the debtors when we prepare the final balance sheet after the reconstitution of the firm. Second entry is in relation to the building, as we have to do the adjustment of appreciation of building by 10% as has been given in our question. So, we will pass the entry building account debit 2,000 to revaluation. Since it is a profit, there is an increase in the value of the asset is being debited and revaluation account is being credited. When we prepare the revaluation account, it will be reflected on the credit side of the revaluation account. Next figure is of investment. They are also being appreciated by 10%. So, 15,000 10% would amount to 1,500. So, consolidated entry for the appreciation of building and investment would be read as building account debit 2,000, investment account debit 1,500 to revaluation 3,500 and the narration which we are going to write is increase in the value of the building and investment, and this increase we know is of 10% on the current value of the asset as has been shown in the balance sheet. Next entry is revaluation account debit to machinery. It amounts to 650 because the value of the machinery is given in our question as 13,000. So, applying 5% on the 13,000 we have got the figure of 650. There is a devaluation in the value of asset. That means machinery has to be reduced by rupees 650 when we draft the final balance sheet after the admission of C. So, this is the balance sheet being given and we have analyzed various adjustments which are being given for this balance sheet. Now, what we will do that there is another entry in relation to creditor. Here creditors are reflected as 10,000 and they are to be reduced by 5,000. So, creditors account debit to revaluation as value of creditors are reduced by 500. This is the adjustment which was given in our question. Now, we will prepare the revaluation account with all these adjustments. So, we have passed the journal entry. So, we know that what has been increased, what has been decreased. So, we will simply post the entries in relation to the revaluation when we prepare the revaluation account. All rules and regulations which we have learned for the posting of a journal entry in our accounting system, we will apply the same rules of posting and will do this posting. So, rather than discussing how it has come on the debit side and credit side, we shall simply analyze revaluation account. Under revaluation account, we will write on the debit side provision for doubtful debts 800, machinery which is being devalued rupees 650 would be reflected on the debit side. Coming to the credit side, we have building. Building is being appreciated by 10%. So, building we have written on the credit side 2,000 and similarly investment has been written as 1,500. Creditors are also being reduced. So, there is a reduction in the liability and when liability is reduced, we are getting the profits. So, here 500 would also be recorded on the credit side. So, doing the total of the credit side, that is 2,000 plus 1,500 plus 500, we are getting the figure of 4,000. Subtracting the same from the debit side, we are getting the balancing figure of 2,550. To understand the mechanism properly, we have given the name of the partners as A and B. It can be any nomenclature, may it be Karan, Arjun or any other name, what whatsoever name of the partners would be. So, we have written over here the names of the partners of which we are discussing as A and B, and the share of the Karan is 1700 and that of the Arjun is 850. Let us see how this share has come. Profit of rupees 2550 is distributed between the existing partners in the ratio of 2:1. Here A share is being 2/3 of 2550 and it amounts to 1770, and that of B 1/3 of 2550 and it amounts to 850. So, we have distributed the profits so arise on account of the revaluation in the existing ratio of 2:1 in the existing partner share. Now, there is another important aspect under the admission of the partner which we have to learn. So, there are certain reserves and accumulated profits and losses which are being reflected in the balance sheet when a new partner is admitted. So, a question comes to in our mind that how shall we distribute the accumulated or existing profit or loss so arriving or so reflected in the balance sheet. So, there is a accounting treatment which has been suggested under the partnership accounting. We will learn it in detail. Any accumulated profit or reserve appearing in the balance sheet at the time of admission of a new partner is credited in the existing partner's capital account in the existing profit sharing ratio. If there is any loss, the same will be debited to the existing partner in the existing profit sharing ratio. Analyzing this entire mechanism of distributing the accumulated reserves, profits and losses, we can say that whatever profits or reserves or losses which has been earned or which has incurred, they need to be distributed only into the existing partner share, as the new partner is not accountable to the already existing accumulated profits and losses. So, these reserves and profits so reflected in the balance sheet before the admission of the partner is to be distributed among the existing partners in the existing ratio. If it is profit, it shall be credited to their partner's capital account, and if it is a loss, they shall be debited to the partner's capital account. So, our next step would be to learn the journal entries, that is how with the help of journal entry we can credit or debit the profit or loss respectively. Here the journal entry is for distribution of undistributed profits and reserve. These profits and reserves which are undistributed are before the admission of the new partner. So, when reconstitution of the firm takes place on account of the admission of a new partner, we have to distribute any surplus which is being reflected in the balance sheet, and the entry is in relation to the undistributed profits and reserves. So, let us see the journal entry. Reserves account debit, profit and loss, this is in relation to the profits, it is to be debited to partner's capital account and it will be in the existing ratio. Now, in the case of loss, it will be a reversal entry. So, when there is a loss, we will debit the partner's capital account, and to profit and loss, that is the amount of loss is to be distributed into the capital accounts of the existing partners in the existing profit sharing ratio. Now, students, a question may come into our mind that when the practical aspect of this entry will come, how shall we record it? So, let us discuss an example so that we can understand much more conceptually that how to pass this journal entry with the help of practical examples or with the figures so given. A and B are partners sharing profits and losses in the ratio of 4:3. C is admitted as a partner for 1/4 share of the profit of the firm. On that date, the balance sheet of the firm shows a balance of 70,000 in the general reserve and debit balance of profit and loss account of 21,000. Journalize the transaction. So, we are given a set of information where we have two partners A and B and their existing profit sharing ratio is 4:3. A new partner is being admitted for 1/4 share of the profit. Now, when he is admitted, we have a balance sheet, and the balance sheet is showing us the figure of general reserves as rupees 70,000. Similarly, it is also showing the profit and loss account, that is debit balance of profit and loss account. So, it amounts to loss, and this loss is 21,000. Now, the practical aspect which we have to deal is the distribution of this profit and loss and the reserve so reflected at the date of the admission of the partners. So, we have to generalize the transaction, and we will have to pass two different entries, one in relation to the distribution of the reserves of 70,000 and another in relation to the distribution of the loss, which amounts to 21,000, and the profit sharing ratio will be 4:3, as we have to distribute such accumulated reserves, profits and loss and the losses in the existing ratio of the existing partner before the admission of the new partner. So, let us see the journal entries. First entry would be general reserves debit 70,000 to A's capital 40,000 to B's capital 30,000, being transfer of the general reserves to the existing partners in the existing ratio 4:3. One more thing which we can analyze is that when we have debited the general reserve, the general reserves account would stand as null, because it is being closed when we have distributed this undistributed profit. Now, when we prepare the new balance sheet, general reserve would not be reflected in the reconstituted firm's balance sheet, as it has already been distributed among the existing partners in their existing profit sharing ratio. Second entry is in relation to the distribution of the loss. Here A's capital debit 12,000 and B's capital debit 9,000 to profit and loss account 21,000 is the entry which we need to pass, and 21,000 is being divided in the ratio of 4:3. So, A and B share is arrived as 12,000 and 9,000. Now, when we have read all the important parameters when a reconstitution of the firm takes place at the time of the admission of the partner, we will apply all those principles and all those concepts in one example and try to analyze in detail that how the accounting shall be done when a new partner is being admitted. So, in this question we are going to learn the distribution of the profits and losses, how goodwill is being treated, how revaluation account is being prepared, how partners capital accounts are being prepared, and finally we shall draft a new balance sheet after the admission of new partner. So, here profit sharing ratios shall also comes into existence, and we have to prepare the account so that the final account of the new balance sheet shall be reflected properly in the new balance sheet which we have drafted. So, we will analyze this question. A and B are partners sharing profits and losses in the ratio of 3:2. C is admitted as a partner for 1/4 share of the profit of the firm. At that date, their balance sheet is as follows. The balance sheet is being given to us, where we have creditors 28,000, capital of A and B are given as 70,000 each, and it amounts to 1,40,000. So, the liability side's total is 1,68,000. Now, coming to the asset side, we have cash in hand 3,000, cash at bank 23,000, debtors 19,000, building 65,000, furniture 15,000, machinery 13,000 and stock 30,000. So, their aggregate is coming as 1,68,000. So, assets and liabilities total is matching up. Now, we have to take care of all the relevant accounts, that how difference in the cash account or bank account has come, what is the adjustment which is given in relation to the debtors, in relation to the fixed assets and in relation to the current assets, and finally we will find out the new balances of the capital after the admission of the new partner. So, A, B and C, all the three partners accounts would be reflected in the new balance sheet. So, let us see what are the adjustments being given. The following were the terms of the admission of C. These terms are the adjustments which we need to pass when we pass the entries in relation to the reconstituted firm. Furniture and stock are to be depreciated by 10%. So, we have with us furniture 15,000. So, it will be depreciated by 10%, and stock of 30,000, it is also being depreciated. And building is being appreciated by 20,000. Building is 65,000. So, we have to appreciate it by 20,000. So our new figure of building would be coming as 85,000, and these adjustments are to be made with the help of a revaluation account. 5% provision is to be created on the debtors for doubtful debts. Let us see the debtors. It is 19,000. So its 5% would be 950. C is to bring in rupees 50,000 as his capital and rupees 30,000 as goodwill. So bank account would increase by 80,000. So current bank account is 23,000. So new account will come as 1,03,000. And we have to pass the relevant entries where the goodwill is being brought in cash. This goodwill of 30,000 is again to be distributed into the existing partners existing ratio. So our question says that make ledger account and balance sheet of the new firm. Let us see the revaluation account. So on the debit side of the revaluation account, we have provision for doubtful debts and it amounts to rupees 950. Furniture and stock which are being devalued by 10%. So we will write the devalued figure of 1500 for furniture and 3000 for stock. Since there is a decrease in the value of the assets, so they are being recorded on the debit side of the revaluation account. And on the credit side, we have written the appreciation of the value of the building, and it is being given in the question as rupees 20,000. So the credit side's total is coming as 20,000, as there is just one entry, that is of appreciation of the building by rupees 20,000. So subtracting 20,000 from the items which are being debited in the revaluation account, we are getting the figure of profit of 14,550, which is to be distributed amongst the existing partners in their existing profit sharing ratio, and it amounts to 8,730 for A and 5,820 for B. Now we have to prepare the capital accounts of each of the partners. The reason of preparing the capital account of each of the partners is that when we prepare the reconstituted firm's balance sheet, we have to write the balancing figure of the capital accounts of all the partners. So first of all, we will write the balance on the credit side of the each partner. So this partner's capital account is to be prepared where the amount column of each partner is to be recorded, that is amount column of A, B and C, both on the credit side as well as on the debit side. So we will start with the credit side where we have to record the opening balances. In our question, we have been given the opening balances of A and B as 1,40,000, and individually they are sharing the capital as 70,000 and 70,000. Revaluation accounts, it is being arrived in the revaluation account and we have simply posted it into the capital accounts. So it is 8,730 for A and 5,820 for B. Bank account, this is in relation to the capital which is being brought by C. So its general entry was bank's account debit to C's capital account. So in the C's capital account by bank is being written, and in the column of the amount of C we have written rupees 50,000. Goodwill which is being brought by the new partner of 30,000 is being distributed in the existing ratio of the existing partners, and it amounts to 18,000 for A and 12,000 for B. So we will add up all the details in the amount column of A, B and C, and we are getting the closing balances as 96,730 for A, 87,820 for B and 50,000 for C. So debit side and credit side's total is matching up, as there is no item which is being reflected on the debit side of the partner's capital account. So these capital accounts balances are to be written in the balance sheet which we are going to prepare. So our next step would be the preparation of balance sheet of A, B and C. This balance sheet is for the reconstituted or new firm which is being reconstituted at the time of the admission of C. So let us see the liability side first. The creditors have remained same and it amounts to 28,000. Capital accounts are being written as A, B and C. For A, 96,730, it is arrived from the capital account of A, 96,730. Similarly for B, 87,820, it is the closing balance of B's capital account, and for C it is 50,000, which is the closing balance of C's account. So the total of the liability side is 28,000 plus 2,34,550, and it amounts to 2,62,550. Coming to the asset side, cash in hand is the first entry. There is no change in cash in hand. So, opening and closing balance are same. Cash at bank, it is increased by 80,000 because 50,000 plus 30,000 of goodwill which is being brought by the new partner is added to the existing balance of the cash at bank. So, the total balance at the year end or after the admission of the partner is 1,03,000. Debtors are being given as 19,000 and we have made a provision of 5%. It will be subtracted from the debtors balances and we are getting the final figure as 18,050. Stock is being devalued by 10%. So, instead of 30,000 we have written 27,000. Furniture has been devalued by 1,500. That means 10% diminution in the value of the furniture is being taken place at the time of admission of the partner. So, 15,000 minus 1,500, final figure of 13,500 which is revalued asset is being shown in the balance sheet. So, framed. Machinery is being shown as 13,000, there is no change, and building which is being appreciated. So, the appreciated figure is being shown as 85,000. Aggregating all the items which are being reflected on the asset side of the balance sheet, we are getting the figure as 2,62,550. So, the balance sheet is matching up, asset side is equal to the liability side and it amounts to 2,62,550. With this, we have learned the entire accounting procedure at the time of admission of a new partner. So, we have learned in detail how the balance sheet of a reconstituted firm is being prepared and we can draft this balance sheet taking into account all the relevant adjustments and all the relevant rules in relation to the profit sharing ratios, in relation to the distribution of the goodwill and in relation to the preparation of revaluation account. With this, we are ending up our lecture of today. In today's lecture, we have learned in detail all the basic parameters which are required to be complied with when a new partner is being admitted. First of all, we have learned to prepare the revaluation account with the help of a practical example. Then we have learned how to do the adjustments in relation to the accumulated profits and reserves and the losses. And finally, we have learned to prepare the capital accounts and the balance sheet of the reconstituted firm on account of admission of a new partner. With this, we are ending up our lecture of today. Thank you.